beautiful girl can rip us apart like this, then maybe our friendship isn't worth it, Dan. Maybe we should call it quits right now.
You just tell me where to sign, bud.
Right on my ass after you kiss it. Kiss it.
Gift a game. How you doing? It's your host, Michael Bullock, aka Mr. Business, aka Super Deuce, investor, aka entrepreneur, aka the best to do it. Alright, this topic today, we're going to discuss property insurance. Now, my background, one of my few backgrounds, I have a public adjusting company, which is an insurance adjusting company, and we basically fight for the insured. In layman's terms, we're the lawyer for the insurance. So if you have issues with your insurance policies regarding property damages and so forth, we're the guys that represent you to the utmost of good faith for no charge at all, out of pocket, no out of pocket costs. We represent you. We get indemnified through the insurance company. So it's a benefit to people. A lot of people don't know. Basically, a lot of minorities definitely don't know. But a lot of people, the wealthy, been using public adjusters throughout their policies. For example, if you get a house, you buy a house, you live in it for 5 to 6 years, storm damages every year. So typically you just file a claim. If you got the right policy set up, you can get everything remodeled and then sell your place and move somewhere else. And you can sell it for more because you got new appliances, new exteriors. So it definitely helps your value go up on your property, as well as, the benefit of stopping the roof from leaking or stopping water from coming in or flood damages, those type of things. But basically, to get the perfect policy, you will have to, when you sign up for your property insurance, you will have to pick R&R. R&R is basically replacement value. So whatever happens at that time, let's say a storm happens, your basement get flooded. Well, whatever's in the basement, the replacement value of today will be compensated versus ACV, which is actual cash value. The actual cash value, you get a property in 1995, you buy it, and you don't do any work until 2015 or 2012, depending on the statutes of your policy. You have actual cash value, so that's basically almost 20 years of depreciation, which is no good. So let's say your roof, we see it all the time with policies. A roof may be $20,000, then they got depreciation $12,000, so now they only got $8,000 plus their deductible, minus their deductible, which is another $1,000, so now they got $7,000. So initially they lost $12,000 because you can't count the deductible. That's what's agreed upon in your policy, but you can agree on deductible rates, and that changes depending on how much your monthly plan is. So back to topic, and this also can be adjusted through medical insurance, life insurance. Typically with life insurance and medical insurance, it has to deal with property or accident, a home or vehicle. for a public adjuster. Otherwise, you have to get an attorney and go through their process. But also with depreciation is loss of use, normal wear and tear. Those are actual guidelines in the policy that you have to pay attention to, because if it's normal wear and tear, they're not covering it. Depending on how your policy is set up, or loss of use, they're not covering it. Because normal wear and tear is age expectancy, is not like a storm or hail damage or wind damage or flood damage cause it to be defective. If that's the case, then they'll pay for it. If not, they won't pay for it. But property insurance is very important because let's say you have a fire and your building is worth $250,000, and majority of the policies, fires are covered. I believe 50 to 75% of the building that's insured at the value. So let's say you got the property in 2010 and it was valued at $250,000. So when the storm happens, a fire happens, only fires, you will get $125,000 to $175,000, depending on your adjuster, depending on the damages, depending on cost of repairs and R&R and ACV. That's what you will receive to rehab your home. Now, if it's a mortgage property, you have to rehab it. You have to get a contract to rehab it. Have necessary inspections for the mortgage company to actually grant you the funds. Well, they're not going to grant you the funds. They're going to grant the contractor the funds. So basically, if you mortgage it, the contractor get the funds. If you own a property solely and you just pay the taxes, they have to indemnify you. So by that choice, you have to either rebuild the property or just start all over with a new property and invest again. Now rebuilding the property, you can just tear down what's no good and just build up from where the damages are, which can be a benefit. And now your property is worth more than what it was before, because now you have new appliances, new exteriors, new interiors that's up to date, that's new millennials of what's going on today. So now you got to you just remodeled your house. You may be out of a home for somewhere to sleep, but you have a new home and it's remodeled, and you didn't have to spend any money, and your insurance covered it because you were insured and you had fire damages in your policy. So, which is the benefit, one of the biggest benefits. So it weighs out depending on your situation. You can either, if you mortgage it, 9 times out of 10 times out of 10, you have to fix the property. But if you own it solely, it's yours. You have rights. You can make the decision. You can sell it as is, and whoever else can build it up or whatever. You can take the money, go elsewhere. But that's the benefits of having a public insurance adjuster, which I have a partner. Shout out to my partner, Michael Johnson. Very good, detailed. Be on top of it. He gets he gets 20% more than every offer that came to the table, which is a great thing, because a lot of adjusters may only get 5% more, 10% more. But he's on a roll right now. That's my partner. So, yeah, A1 Neighborhood Adjusters, LLC. A1 Neighborhood Adjusters, LLC.org is the website. Do floods, property damages, roofs, tuck pointing, you name it. All damages covered. I just want to shed some light on that. Definitely a benefit, definitely to the black community, minority communities. Something that's been going on for about 100 years. We knew nothing about it, but this is something that's indemnified through the insurance companies. People pay insurance, and you paying them for 10, 20 years. $200 times 10 is what? $2,000. So let's say times 12, that's $2,400. 2,400 times 10. You know what I'm saying? That's 10 years. That's $24,000. That's what you have in escrow. They'll cut you a check for $5,000, and you need $16,000 worth of work to be done. What do? That's when a public adjuster comes in. We adjust the claims, get you indemnified. You don't have to worry about that anymore. This is a gift game. Dropping gems on the way. Y'all have a great day. Happy holidays. Peace.